All right, y'all. Sorry about the glitch. Okay. So I think we got 110 pips on the first. So from here to here is 110 pips.
You can't see your MP4.
Uh, come on. All right. Everybody can see?
Yeah.
Okay.
Yes.
Sorry about that. Okay. So the first position is 110 pips. So the next flat bottom, why would this be considered the next position to which I can open up a second position? Why?
Broken out in the structure.
Represents continuation of the trend.
Okay, ladies and gentlemen, let's pause for a second. Now, some of you are new to this, right? Because there's some new folks here over the last couple of months that we haven't talked about it. Some of y'all been trading here for a year, 2 years. Come on. The flat bottom or the flat top candle represents the beginning of a trend, or in this next flat bottom, a continuation. So this is a continuation or co-signing of the upward trend. So from here to here, it's going to be 90 pips. So somebody write that down for me. So this continues to go up, and here's another flat bottom. This would be our third position. And from here to here is 27 pips. So we have 110 and 90. That's 200, 227, 227 pips. 227 pips. And let's just say your average lot at this point. Let's say you're smoking now. Let's just say amongst all, because remember, all right, let's say from, you've been smoking. So my standard lot here is 20 pips, right? So from here to here, if I just did one position, there's 111 pips. If I did 111 times 20, that's how much money I would make. But I have this second position. Now, in your basic class, I think, or Kim has talked to you guys about risk management, proper risk management. So when you open up the second position here, you're going to take that standard lot of $20 and you're going to cut it in half. So when you open up this second position, that's going to be $10 lot. Y'all with me?
Yes.
So
Yes,
so
sir.
like, to make it plainer, if I open up as $20 lot size, every position after that has to be cut in half.
Mm.
You feel me on that? So,
Yes.
like, the second position is
Yes,
going to be
sir.
$10. Then the position after that is going to be $5. And then the position after that is going to be $2.50. And then $1.25, and so on. And the reason why you do that is because if price were to pull back, you don't want your latter positions eating up all the profit you made on the first position. Y'all remember the story I talked about the women who used to trade with us? It opened up 3 positions on AUD USD and didn't see the news. But not only did she have
Yes,
a $5 lot on the first position, she had a $5 lot on the second and a $5 lot on the third. So she was extremely over leveraged. Extremely over leveraged. And then before she know it, she didn't check the news. News came in on AUD News, and then in a matter of minutes, her entire account was gone except for maybe like $15. So when we talk about being a good steward and your responsibility to your account, you have to take those things in consideration. Everybody understand where we're coming from here?
Yes, sir.
Yes.
Okay. So knowing that, so instead of trying to figure out the math here, let's just say now we take these 3 positions and let's just say it adds up to $15. So now you take the all the pips made on all 3 positions. So what did we say? 220, let's just call it 225. So you take 225 times 15.
$33.75.
$33.75 on one upper movement on this one particular pair. Could you do something with almost $3,500?
Certainly.
Yes, sir.
Certainly.
Not go to work.
so okay. Now keep in mind that you're not just doing that discipline on the one pair, but you have to take your total account. So you have to take into consideration the amount of open positions that you have and how it affects your total account. So let's say you're in NZD USD, but then you see something for USD JPY. Now you can't use a $20 lot size. You have to use the lot size available to you minus the amount of equity you're using in this particular pair. So your lot size might not be $20. Well, it won't be $20. You've got 3 open positions. It could be 10. It could be 8. You would have to do the math. Y'all feel me? So it's not just on this pair that you have to be concerned about, but it's your entire account and how it's being affected by the multiple positions that you already have open. who doesn't understand that? If you don't, come on, let's get into it. Everybody got it?
Hey, I have a question for you. Whenever you're in multiple positions like that, are you going to still do your standard trailing stop on each position, the 8 to 10 pips, or how would you
Yeah,
do that?
that doesn't change.
Okay, all right, thank you.
Derek, I have a question. It's a little different. It's really an entry question. Instead of, I'm looking at, at the flat bottom, but I'm also looking at, which I consider a pretty heavy line of structure where you see those, to me, I see an M, and you got four
You
candles,
said to you see a what?
a M
Okay,
to,
okay.
to the left of that flat bottom candle that we started. I see an M right there, so I see four candles pretty much in line where they close. And if you go even further, there's a bunch of other candles that fall on that line. Would that potentially be an alternative line of entry as opposed to starting at that flat bottom?
See, I will be frank with you. I never take price to the left of me when I'm in an active trade, um, such as this, because me personally, I'm only, and it's a very good thought out question, but I'm only thinking about the upper movement as it exists. Like I'm in the trade now.
No, I'm talking about as opposed to starting where we started. I mean, I'm looking at waiting until I get to that point to start because I'm
So
looking
what are you saying? You mean you're waiting here?
Yeah, I'm putting my line of structure there and starting at second position there. Would that be a little
Well, this upper movement actually started here,
okay?
right? So let's look at that. So my upper movement started here. So here, and then I had price rejection here.
Got it.
So once I see the price rejection here, I might go ahead and do a trailing stop here. I'm sorry, a trend line here. And then at that point, if I see the break in structure, which is this dude right here, then I have
Yes.
to consider where where would my get off point be? And then I would have to start marking some significant point, right? I would have to mark some significant point of structure in a horizontal manner before I would decide, okay, well, this is over. Now, however, there is not a candle. I like this discussion. It is not a candle here right now that tells me that this is time to get out. Other than this is an engulfing candle, but it does not engulf the last three candles. It's real close here. But I'm not using this candle to tell me to get out. I
I
would
guess,
look at this significant event right here. This is a significant event. I don't know if that is the remnants of a bank move or is this news? I'm not really sure. But this would probably be the candle in this area of price rejection that I would say if price breaks here, I'm getting out of the upper movement. You feel me?
yes, but I think maybe I misunderstood when we talked about the initial starting point. I thought we initially got into that trade on that flat bottom.
Yeah, I got into the trade here on the
Right,
flat bottom because of the fact that this is below yesterday's low.
right.
So if I see this price rejection here and I see a flat bottom, that's the beginning of an upper movement. I'm taking this.
Oh,
I'm taking this
absolutely,
here. Why?
absolutely.
Because remember, this is price moving from structure, coming up from structure. So I'm taking this here. Me, I'm taking this here.
And I have
And
no problem.
and and, and this is a continuation or a cosign from this starting position. So this upper movement is actually a continuation from here. This is still saying that this upper movement is still in business. Because let's look at the line chart for a minute. This is an M. You are correct.
And what I was saying, and this is just me, I would have really put a lot of weight on that on at the top of that M at that structure line. I would have a structure line there, and I would probably have gotten into my second position at that point, as opposed to down at the bottom of that, flat bottom. That's just me personally looking at structure.
So you're saying your second position. Let me put the candles back on here. You're saying your second position would have been where?
Would have been right at the top of that M.
Here?
Yes.
Yeah, but if I recognize the flat bottom, this is my goal here. If I recognize this flat bottom, and I guess okay, we're still in the same trading period.
Yes.
The only thing is I get in here early and you would have gotten in here.
Yeah. And you answered my question, why you really got in at the flat bottom versus um getting in, beyond the top of that M. So you've answered that. You, I guess, put enough the fact that that flat bottom is the continuation of a trend is strong enough to get in there. It's pretty much answered my question, because otherwise I would have probably waited until the top of the M. But now and then, um, I just saw a lot of structure there, and I didn't know whether getting in at that flat bottom would give me enough momentum to continue through that M, because visually I'm seeing two rejection points right there that jump out at me. So that's all that I'm basing that on.
So you're saying that you would have put it a horizontal line here, and then you would have got in after this. right? Right?
Prior to the discussion that we just had, that's probably what I would have done. But now that we've had that discussion, I would look at it a little differently.
Well, I mean, listen, this right here, I mean, if we're getting down to the minutia of it all, this right here is the conservative move here. Right? This is the
Yeah.
conservative move. I'm telling by me seeing this, yes, this is an M, but I would have also, after I saw this flat bottom, and then I saw another one, I know I got an upper movement.
Got it. That makes
I don't need to wait. And not only that, think about this. I would have been at this point, I'm looking at price to just go off. The only thing that would have bothered me for this continued upper movement, it wouldn't have been this. It was this dude. If I was going to worry about anything, it would have been this level here, just because of all the money here. This would not have bothered me. This would have. And this goes back to all levels of structure are not equal.
Got it.
And it's a good point. You know, you bring up a good point because the rejection points at both of these spots. However, those rejection points were not enough to change the dynamics of the upper movement. Now, if you'd have started this back here, right? Here's 64 pips, and you basically giving 2/3 of it back. But this candle formation does not tell me to get out of the trade. Neither does this one. But this dude right here, that would probably have been the one that really bothered me. But it wouldn't have stopped me from getting in the trade. But price action would have had to, okay, let's go back over here. If I would have saw this, two tweezers, right? That's telling me to get out.
Yes.
Or if I'd have saw a flat top candle, that would have told me to get out. But if I'd have saw this, then I'm waiting. Or honestly, I'll probably get out of the trade and I go and find another one. Because, you know, if I would have saw tweezers there, it's meaning, ladies and gentlemen, that means that that's a stop sign to that particular trend. A plus and in concert with this guy here from past price, then I probably would have just got out and took my marbles and I'd have went and found me another game to play. Because let me show you something. This is barely enough to put this trend line here. And I'm putting that here because of consolidation here. Barely. Right? So I have a break of structure here. Right? But because I have price coming here and then price coming back here, I could come back here and do another trend line. Now the world looks a whole lot different, right?
Yes, it does.
Because now look at all this space here. So now if I'm starting here and I got a $1.39, right? I have a breaker structure. But if I'm using this as a point of reference, right? Price never breaks this line, this horizontal line here, until here. Closes here. Now I'm out of the upper movement. Because that's not a retest. That's a break of structure. And the upper movement never recovers. Until now, we got a flat bottom, comes up the structure, comes back. It's still not an entry. I'm probably not going to get an entry until when? Until price breaks the structure here and hits this plane right here. And then we're starting the upward movement. You see what I'm saying? How significant this dude is now?
Yes.
Because now that whole line here is going to be my entry after the break of structure for the upper movement. And that line is so cold that I'm going to give you a buy peak right here. NZD USD EP for a buy peak is 0.60078. 0.60078. You with me, Richard?
Oh, absolutely. That was good stuff. Real good stuff.
Because now let's look at the fib. Oh, let's go back here. So now we take our fib and take it right here. Actually, the top here. It's 13 pips to the 2360 to 23.6. But it's not just a regular 13.9, almost 14 pips. It's a 14 pips on a full boat.
Take it all day.
Yeah. And see, ladies and gentlemen, the discussion Richard and I are having is a discussion you should have with yourself every time you're looking at something is how does the momentum of whatever, an up or downward movement, and how is that playing against structure? Because, now, Richard, I'll tell you this. Let's say that price, I didn't have this flat bottom here.
I'm with you.
And let's say this was the first flat bottom. If this was the first flat bottom, then I'm probably not getting in here till after this. And not only that, from here to here is probably my TP. This line right here. And then from here to here would probably be PT2.
I can see that.
And the reason is that the movement or the momentum is starting here. So my collision from here to here is not as great as opposed to this getting more momentum from here and going all the way through.
Makes perfect sense.
Kim, you see what we're saying here?
Yes.
Dimitri, you see what we're saying here?
I'm gonna have to see it a few more times, but I'm kind of following.
Okay. We have to. I'm gonna send you a text tomorrow about our next get together. So let me ask you this: based on y'all forgive us for a second. Based on the information that we had when we got together, how's your trading been since then? It's been a week now, or just
I
6 days.
got more, I guess, entries, more possible trades to get into. Just no actual entries is just normally the issue that I come across.
So you're still having the same issue then?
Yes, sir.
Okay. All right. We'll get that squared away next time we get together. Matter of fact, let's just do it same time on tomorrow night or
Okay.
Tuesday. No, it has to be next week. Can't be tomorrow. So next week, 2 a.m. Tuesday.
Okay, that works.
Okay. So if you haven't been trading long, you're probably looking at all of this. You go like, I don't know what the hell y'all been talking about for the last 30 minutes. So let me sum it up like this. Each one of these candles represents a 4-hour period. Each one of these candles are different, and that means that there is more money being traded or not being traded based on the size of the candle. This candle right here, something significant happened here. We know this is price indecision at its fullest. If you're looking at a picture, if you wanted a picture definition of price indecision, here it is. Each one of these candles or a formation of candles represents that price is talking to you. Price is telling us something as price moves up and down. Now, I remember when I was first started trading, we were trading at Dr. Spill's house. This day, Dr. Spill must have 500 people in his house. 10,000 square foot house. And he had 500 people in it, this small gathering. And someone that was supposed to be a voice for him or one of his knights on the round table, so to speak, I asked her, hey, can you help me understand this movement of these candles? And she said, well, the candles are telling you something, but what you need to do is to go to the back office and look at some videos. Basically, she didn't know what the fuck she was saying because she walked away from me and proceeded to sign 3 or 4 people up and not mention trading one time. And it was very frustrating for me as a new trader. So one of the reasons why I have so many classes is because of episodes like that. I wanted to have, because Dr. Spiller could, Dr. Spiller would have classes, London session classes starting at 2 a.m. And even at 2 a.m., he would have a couple of hundred people on. So if you have so many people on, you can't get your questions answered because now it's not open mic like it is here. So you can't have 200 plus people talking at once. So you had to type in the chat your question, and hopefully that the person that was writing the questions down for him to answer, you hope they would pick your question. Well, a lot of times it didn't happen. And it's not like, they didn't want to answer. I don't know. Maybe they didn't. I don't know. Maybe if they wanted to answer as many questions as possible. But when you have in that scenario 200-300 people typing in questions, it was just hard to catch them all. So I wanted to be the instructor that I didn't have, and I'm getting somewhere with this, y'all. So as an individual, you're looking at this. You just, if you're new, you're just going like, this means absolutely nothing to me. Well, here's something that you can understand on, even if you're on the novice level. Each one of these candles are representing a movement of price and a conversation to you as an individual. And matter of fact, if we're using the science of price action, it is saying the same thing to everybody. When you see in a doji, money is being taken away from this upper movement. That means that people are coming up here, right? And these folks took profit. But the surge continued because I still have an upper movement here. Then bears came in, sellers came in. And right here, they almost sent the trend the other way. But this level of structure here held the upper movement, and it continued in an upper movement. Sellers came back again. And see, at this point, you know what this is? This entire area right here, you know what this is? This, well, I drew that wrong. This right here, this represents one big ass bar fight. Sellers are trying to get established. Buyers are trying to get established. So everybody can understand that part, right? Sellers are trying to get established here. Buyers are trying to get established. Y'all feel me on that?
I can see it.
Yes, sir.
But there's some key candles here. This one, obviously. This one, you probably don't believe that, but I'll show you in a second. And this one. This one although not as much money as this one, but this candle right here is just as important as this dude. Well, Derek, how do you figure that? Because this guy engulfs all of these candles up until this point. And obviously, this candle engulfs all of these. And, we can't see, but this candle engulfs all the way for some time. So with this candle, could a person get in here for a sell because of this huge engulfing candle? Yes, he can. Yes, she can. Yes, you can. You could have taken this candle here and opening up a sell position. Now, hang on here. I knew I was going to be magical tonight. That's why I recorded this. And this is going to be awesome. What was I going to... What? I lost my train of thought. Because I started thinking about Venmo. Damn, I got to get this up in it. And I lost my train of thought. God dang it. Oh. So, for the most part, this has been operating in a sell for a while. So this is not just starting a new trend. This actually looks like it is a continuation of the downward movement. Y'all feel me? Because you can see momentum here as price, not the wicks, but price, the candles themselves, they get further and further away, and more money is being put into the downward movement. And you could see how as the money comes up here, as it gets larger, that dissipates until this dude. And then all of a sudden, look how far price is away from the 50. Y'all see that? This big space right here.
Yes.
This is telling you how powerful this dude is. This is significant. And that's why, Richard, I said that I wasn't worried about this dude because, see, here you got price indecision, right?
Yes.
Not right here, you don't. You see?
Yes.
And this is an example, ladies and gentlemen, of why certain levels of structure are not equal. This level of structure, these two hilltops here, this definition of this M has nothing on this definition or this impact of this candle right here. It's right there, plain as day. This is operating above the 50. You feel me?
Yes, sir.
Not this dude.
Yeah, that 50 had a lot of visual impact.
Yeah. So what is this? This is fool's gold right here as structure.
Yes.
This is the guy.
The 50 makes it quick, crystal clear.
So So, ladies and gentlemen, to sum all this up tonight, when you're looking at candles and you're looking about entries, I have to take in consideration of structure and then there's structure. Now, if you take away the 50, this looks significant, right?
Yes.
But if you look at these levels of structure versus this one, it's not even close. That's why I said I would get in here looking at that flat bottom, and I would not be worried about these two, as much as I am this one. Y'all feel me?
Yes, sir.
So this is why I say, if you're going to do your own market review, and this is what I told Dimitri the other night. If I'm looking at a chart, the first thing I would want to do, now you could do this, right? You could go and put horizontal lines on these sharp areas of structure. But see, if you really look at these areas of structure, they're not really that sharp. I mean, this one is kind of, but all the other ones are kind of round, right?
Right.
But if I say, hey, I'm just doing a market review, and all I want to do is mark flat tops and flat bottoms. And ladies and gentlemen, when we're talking about flat tops, we're talking about bearish candles. This dude right here is a flat top, right? So let's just look at this real quick. We're going to get off because I'm running late. But let's mark this flat bottom. I'm going to mark this flat bottom. This flat bottom. This flat bottom. This flat bottom. All right. Now I'm going to do flat tops. There's a flat top. I think that's the only true flat top on here. This candle, that's a wick, and that's a wick here. Now, what I'm going to do, ladies and gentlemen, is I'm going to mark where the money in price rejection is. Okay? I'm going to mark this. This is already marked. I'm going to mark here. Well, that's already marked too. And I'm going to mark this. So basically what I'm doing is I'm marking the flat bottoms and flat tops. Why am I marking flat bottoms and flat tops? Because they are the start of a trend or a continuation of one. That trumps, listen to me, that trumps any area of price rejection. I don't give a shit how much money there is. Now, this area could be an exception only because that's a lot of money. That's probably a bank move right there. So let's go back. Let's clean this up real quick. So when I look at a chart for the first time, I'm locating in about 45 seconds. I'm looking at this chart. I'm locating price. I'm locating support, resistance, and structure. And then before I look at an indicator, I'm going in my head, where is the freaking money? Because I know that if there's a lot of money in one particular part of this chart, I know that that is going to be a significant level of structure. Okay. Derek, that sounds hinky. All right. I'm gonna click on some pairs real quick. Right here, money. And this is also significant. This is a flat bottom candle. Right here, money. Engulfing. Right? This, right, takes this. This is a big cosigner here. And I have consolidation, but it takes me all the way through to here. This dude is significant because it allows me to draw the trend line. And then I would draw a second trend line right here. This guy is the anchor to this whole upper movement. You see what I'm saying? Of course, I'm going to find flat bottom, flat tops. But I want to know where that money is. Let's look at another one. Let's look at another one. Real quick. Real quick. Here's current price. And we have a primary primary value position right here. Now, the cool thing about this upper movement is I see automatically I only have 2 points of support, support and resistance here. I have 2 resistance lines. 2. That's it. This has the potential to come all the way back here. 219 pips. GBP USD. Better put it on your watch list already. So, real quick, where are my flat bottom, flat tops? Here's a flat bottom. Boom. Here's the money right here. This is consolidation. This is telling me I can draw my trend line right here. So, Miss Christie, Kim, Gregory, Richard, you know what that trend line is telling me? It's already plotting my entry.
Yep. I'm just waiting on 1 o'clock.
It's already plotting my entry. Already plotting my entry. And not only that, I'm looking, this right here is also significant because this is a significant event right here. Price indecision of the greatest kind. This is the ugliest freaking candle on the board. And I'll put my horizontal line right here. And then if I'm looking for my entry for the upper movement to be here, I am looking for a significant candle or structure, or if I can't find one, where's the money? And I'm looking for my entry to be probably right here. Right? So I'll grab my fib and I'll start right here all the way to the top of this box. Is that boy cold or what? I'll take that 23 pips.
Dead on the money.
Oh my God. Hey, yo, price action is it. Period. I can already see TP2 because I'm looking at this cluster of wicks right here. I'll go ahead and take it to here. Here's TP1 and here's TP2. GBP USD EP for a buy is 1.34735. 1.34735. TP1 is 1.34923. 1.34923. That's TP1. TP2 is going to be 1.35210. 1.35210. And all I did was mark structure. That's it. Once I established what current price was, I looked at located support, identified support, resistance, and structure. Also identified that price could continue to go up here to the top of the trading zone. Why? Because of the fact that I had only 2 points of resistance, the H4 here and the day one here, and I didn't have anything else. Nothing. And Richard, you see the difference from the last one we did? Well, here is money here.
Yes.
So I have to take that into consideration. But not only that, the trend line is telling me, nah, man, you ain't got to trade yet. Yes, you're going to get a break of structure right here, but I have the H4 here and this line of structure. And I'm going to wait until price breaks yesterday's high, and just when this horizontal line here connects here with this trend line, just above that is going to be my entry. And ladies and gentlemen, all I did was identify or locate price and identify support, resistance, and structure. That's it. That's all I did. And I used the language of the candles to help me. Basically, I looked for flat bottoms and flat tops. If I didn't find that, then I just located the money. And look at this line right here. Everybody see this line? Everybody see this?
Yep.
Yes.
Money. 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 Entry. Any questions? No?
Nope. You answered a lot of mine tonight.
PP,
Just by
What's up, Phil?
what's my trading stock? The buy peaks again. I'm sorry, I didn't.
Kim, hey, check the chat. Check the chat.
Thank
Kim's
you.
gonna put the signal in the chat. The one I just gave.
Yes.
Yeah, Kim's gonna put it in the chat. Just check the chat. Not this one, but the big chat. The trading, the Telegram chat. She'll put it in there in a little bit. Okay.
Thank you.
All right. But the EP is 1.34735. But if you give her a minute, you give her a minute, she will have it in the chat as far as your TP1, TP2. Christy, you got it? I don't even know. She probably can't talk.
I got it.
Okay. So, ladies and gentlemen, this is all about just going to the next level. This right here, if you can identify these things that we talked about tonight, man, that is a huge thing. But this is also something that if you're taking notes and you keep doing your market review, your own personal market review, you're going to see it. And also, ladies and gentlemen, let me tell you this. Let me remove this. If you click on when we did this, when we clicked on here, and I see this downward movement, and then I see this potential primary value position here, then the first thing I'm going to do is grab this trend line and bring this here. But Derek, why is that important? It helps line out perfectly when I should get into a trade. More importantly, it tells me where the money was in this downward movement. This right here, right? I mean, this is a clear, strong downward movement. Well, why do you say it's strong? Because the only, I got a sideways movement here, and I got a retest right here. And the retest proved to be powerful because see how price moved away from the trend line? That's money right there. Right here, so far, this says that this money is still present. We'll know if it continues to be present if price continues in a downward movement, right?
Yeah, that's correct.
But if this movement here consolidates and then I eventually get a break of structure, that just means that now we have that area of rejection because in the rules, it talks about breaking significant lines of structure. The trend line is a significant line of structure. Okay? All right. I'm only 20 minutes late for my next class. Let me get to it. All right, y'all. I'll talk to y'all tomorrow night. Y'all be blessed.
Great class, man. Thank you.
You're very welcome.